Hello, welcome to today's Asset Servicing Times panel discussion, where we're going to be talking about asset servicing in South Africa. Now, South Africa, of course, has the largest asset servicing market on the continent, and as with other countries, is seeing geopolitical turmoil and macroeconomic volatility as a backdrop for its financial markets. You add to this regulation and the growing complexity of financial instruments, and you start to get just a feeling of what asset servicers and custodians have to deal with in the country. Now, our panel is going to be talking about this and many more issues today, of course. Before that, I'd like to just thank Straight and Rand Merchant Bank for sponsoring us. My name is Karl Loomes. I'm the group editor here at Asset Servicing Times. And I think without further ado, I might just ask the table, ask the panels to introduce themselves. So, Sfiso, perhaps we can start with you.
Okay, thank you very much. Sfiso Ndala. I'm from an organization called Rand Merchant Bank. We are bankers, so we like acronyms. So I'm from RMB, that's what it stands for. And I work in a division called Global Security Services.
Thank you very much.
Hi, I'm Mark Kearns. I'm the CEO of Adapa Advisory. Adapa Advisory is a specialist consulting firm that focuses on the post-trade and security services arena.
Thank you. Greg, maybe last but not least.
Gregory Naka. I'm the head of the CSD services business in South Africa for Straight, the Central Securities Depository in South Africa.
Thank you very much. Okay, so jumping straight into it then, a fairly broad question. Given some of the things that I mentioned at the start, given grey listing, given the credit rating, given national politics, what do you think the current landscape, the market landscape, is looking like in South Africa? And do you think it's having an impact on inbound investment? So I think, Sfiso, I'll start with you maybe.
Yeah, sure. So, I mean, there are a myriad of things happening in our jurisdiction in SA. The FATF loaded South Africa onto the grey list. I think this was last year, around the first quarter last year. So the grey listing has been incorporated into the grey listing did not mean that South Africa is closed for business. It just meant that institutions that want to deal in South Africa would have additional compliance that they will have to deal with additional DDs, enhanced due diligences that they'll have to do, which obviously means that from a costing perspective, it will increase their costs. But like I said, South Africa is still open for business. The other aspect of it, it did not really have an impact onto our credit rating or an immediate impact onto our credit rating. However, if we don't do enough to get ourselves onto the grey listing, it might have negative sentiments onto our jurisdiction, which means that flow of liquidity might be a bit of a challenge, and then as a result, then might have an impact onto our credit rating. But if I think about the last 12 months, I think the trajectory has been fairly positive. There's been a lot of steps that institutions and the government have taken really to implement a lot more anti-money laundering policies to make sure that we get out of the grey listing. And if I think about the reasons why we got into grey listing, it was not really necessarily the institutions that faulted. It was mostly more on the fiscal side, that there were some AML policies that were not properly implemented, and so hence we found ourselves there. Looking at the bright side of things with this thing is that we've seen quite a lot of partnership between government and the private sector. So there's been lots of initiatives that where the private sector is partnering with the government to make sure that we put policies in place. I know there's instances where people from the private sector have been seconded into government to assist and to make sure that we get out of grey listing. So the trajectory is positive. But we remain extensively cautious because the deadline of 2025 needs to be met, and we need to put measures in place to meet it. In addition to that, obviously, just like half of the world, we've got an election year this year. Sentiments are that for the first time ever, we probably might gonna have a coalition government, which is something that we haven't really tested before because we've never had a coalition government. The positive thing there is that in the last 30 years, we're going to experience another free and fair election, hopefully, which is a great thing for the country. So yeah, I mean, we are looking at a coalition government. I mean, I think from a business perspective, there's hope that the governing body would get at least above between 43 and 47%, which means that they'll still have a large majority. So they will partner with one of the smaller parties, and as a result, there would be some consistency in the policies, especially the financial policies that have been put in place. There are collisions from a business perspective that we might not be comfortable with. So it will be good for the nation, it will be good for business that we get some sort of consistency going forward. And then finally, because it was a broad question.
Oh, please, yeah, welcome.
And finally, if I think about last year this time, we think in a thing that South Africans called load shedding. So we had lots of challenges with our power, with our electricity. I remember I came to the UK and I needed to charge my phone. So I needed to come to the UK to charge my phone. But electricity was a big issue, and since then there's been some initiatives that the government has taken to see how they fix the power problem. One of those, which was a massive thing, is that the president recruited or employed an electricity minister. So this gentleman was put in place really solely to focus on fixing our power issues. Last year, this time, like I said, he was appointed and didn't really have much of a mandate. So there was some cooling period where we're trying to understand exactly what was his mandate as a minister of electricity amidst two other ministers that sort of like had a view and a look-in and some accountability and responsibility onto power. So we effectively had three ministers that were focusing on us fixing our power issues, because from an economic perspective, it slowed down activity in our economy. Subsequent to that, he was given a mandate, and the bulk of his mandate was more on power generation. We were expecting the worst. At some point, we were expecting the grid to totally shut down. Thankfully, we did not get to that instance. I think the highest stage that we went through from a power perspective, I think was like stage 8 officially, because there's unofficial opinions as well. But officially, we've got on to stage 8, which means that we've got very limited power on a daily basis. Corporates were well suited, they were well prepared. We had massive generators, and I think from an economic perspective, we were able to carry on. Households also provided themselves with alternative power, which was grateful for households. So the country continued, and since then, I think the trajectory has been quite positive. We haven't experienced as much load shedding, and obviously promising to get out of this quite a lot, which is going to have a massive impact onto economic.
Yeah, of course, quite a broad range there. I mean, Mark, I noticed that quite a few points. Sorry, Greg, will you?
Do you mind me just supplementing some of
I
the
can
stuff?
see everyone nodding, so chomping at the bit.
So I mean, because we're sitting at the CSD, we're seeing the whole market in terms of impact from a grey listing perspective. So I can give you a market view in terms of how things have been playing out. So definitely from a foreign investment perspective, grey listing has impacted us. If you think about it in the context of asset managers or any foreign institution investing into a foreign destination, they've got mandates that they need to comply with to protect investors that they look after. So we've seen a drop in foreign investment or foreign investors into South Africa. That's natural. Any grey listed country would see that. It's the lowest in 10 years, and that's just because of the listing, the grey listing itself. But everything any negative, let's call it, scenario has an opportunity behind it. And what we've seen come out from the opportunity side, as Sifiso said, is we are one of the companies in South Africa that's engaging with government to try and solve transparency issues. So if you think about the public markets, there's a lot of transparency around who owns what from an investor perspective. But the government has a big problem. They don't know who owns what in the private sector. And so you've got to complete the loop, because the combination of both is actually what they need to solve for. So we're helping the government in terms of digitizing the private sector so that we can enable them to have transparency around ownership. And that's a big, not just for South Africa, but that's a big issue globally in terms of private sector ownership. So that's one of the big opportunities that has come out of this, that'll take our market forward. So there's transparency, and then on the back of that, once you have transparency, then there can be enforcement. And that's one of the other conditions around the grey listing, is that our police cannot enforce because they don't know who the actual beneficial owner is. So that's a big thing for us. Just on maybe also to supplement on the power issue. So one of the biggest things that the government has also done is they've taken away restrictions for the private market or private players to play in the space. So our power utility was managed by one entity, but now they've taken away those restrictions, so the private sector can actually play in the space. And in Cape Town, in fact, there's 100 hectares of land that's owned by a private company. They've put up 1 million solar panels, and they push all that power back into the grid. So the private sector has helped tremendously, and that's why we see the stabilization of the grid over the last few months. It's because the private sector has got more fully involved, and also household homes have managed to create lots of power within their own environments. And that's really because we're at the tip of Africa and the sun is for free. So we've got a lot of, let's call it the energy resources in order to be able to create value for not only private homes, but also for the economy and the capital markets as a whole. The one big thing, and I'm sure we'll talk about it as we go through this conversation, is we are seeing a move away from public platforms for listings into the private sector. And traditionally, maybe 100 years ago, the exchange used to be the marketplace for raising capital. That's revolutionary. It's no longer the place now. So you can raise capital at any point. So we're seeing a lot of things actually out of the grey listing that's caused us to think a little bit different about our capital markets, which is great because then we're forced to think differently. So whilst we're in that space, I think that the role players in the market have started to think differently about how to attract new business, how to look at customers differently, how to look at foreign investors differently, just so that their assets are protected in any space that they're in.
Yeah, I mean, triggers opportunities, I suppose, these kind of things, don't they, in innovation often. Yeah, Mark, as I said, I saw you nodding along with both of these guys. What do you think?
Look, I'd concur with both Sifiso and Greg's comments. I've been doing business in and out of Africa for over 25 years, and but there's no doubt that in that 25 years, this has been one of the most challenging periods that I recall. And both of them have talked through some of those challenges, in some detail. I think that the trajectory, however, I would agree with Sifiso, and the broader thinking of how do you address this from an investment destination point of view. I think people are thinking laterally about how to progress from this point, and I think the trajectory is a positive one. I mean, obviously, the outcome of the election is an important factor domestically, as well as how that might impact the international sentiment. But I think what's important is that South Africa is a very sophisticated market. It's very liquid. There's lots of fantastic investment opportunities, be it in the public or the private markets. And of course, you've got a very strong domestic environment from an asset management, wealth management, pension perspective, very mature, diverse, and obviously heavily invested in the domestic market as well. So the infrastructure is strong. I think the issues that have been articulated, there's a path moving forward. Now, would people like to see that accelerated? Of course, and would you like to see greater levels of foreign inbound investment across the board, not just in securities, but in broader projects? Of course you would, And I think the emphasis from government, from the private sector, that has to be a big emphasis, whatever the outcome of the election moving forward.
Okay, perfect. Yeah, as we kind of said, these lateral moves and what have you, it's opportunities maybe, but of course everyone always wants it to move quicker, right? I mean, that's the way it is. Okay, so maybe moving on to our next question, which is kind of getting into the weeds a little bit. How do regulatory frameworks like the FAIS and the CICSA impact asset servicing in South Africa, particularly with maybe regards to compliance requirements and oversight? Mark, perhaps maybe I'll start with you this time.
Yeah, no, look, I think I think one of the things that characterizes South Africa is that it is a well-regulated market, and frankly, it has been for a long time. For those that are watching this particular session, many of the principles have got foundations in UK law. So in the unit trust market, for example, the concept of a trustee, trustee duties, and a regulation that supports the role of the trustee and indeed the whole value chain is very mature. As it relates to the securities markets, from an exchange point of view, from a settlement point of view, and I'm sure Greg will expand on it, is very heavily regulated with various oversight in the whole process. So I would say from a regulatory point of view, the market is extremely solid and strong principles that can continue to be built on. I think the point that Greg made, around transparency and broader investment products and private markets and so forth, obviously as you develop the market, there'll be a need for regulation to support that. And we'll talk about digital assets at some point. Again, that's another example where regulation needs to be developed to support how the investment markets are changing. But the foundation and principles are very strong.
Okay. Greg, said you've...
Yeah, so we as the CSD in South Africa, we predominantly, let's call it, are regulated under the Financial Markets Act. And then under the Financial Markets Act, the level of scrutiny and governance from a regulator perspective is significant because we're defined as a market infrastructure with a systemically important financial institution. So all of that comes with a lot of regulation by default. So if I think about it from a phase and a CISCA perspective, both pieces of regulation have been fit for purpose for a very long time. If I think about the growth of the market so South Africa has quite a strong savings industry, and that comes out of, let's call it corporate employment. So you are mandated, if you are employed in the environment, that you must contribute to a pension fund or a provident fund, etc. So that's helped the savings industry, and it's become a culture within South Africa. The market's about 3.2 trillion from an assets under management perspective. But what we're also trying to do through innovation and looking at regulations that have been there, or pieces of legislation that has been there for quite a long time. If we look at globally, what we're seeing is mutual funds as a theme is coming under the auspices of the CSD banner from a security type perspective. So one of our intentions in South Africa is definitely to look at that from a very simple perspective. How do we create further risk reduction? How do we further optimize? Can we give cash incentives back to the market from the way that we price so that we can democratize the savings environment a little bit more within the environment? Because if you think about it, if the savings culture is driven through the corporate employment structure, but you're an entrepreneur and you want to save 5 Rand or 10 Rand within the environment, why should we give that ability for investors to create a broader economical savings culture? So if I think about South African economy, we're 60 million. Working class is probably about 25 right now because of the high employment rates. But there's only under 2 million that's actually saving through the structures. So if you really think about how can you create scale and how can you democratize the way that we can allow all South African citizens who have some sort of employment, not being it in the corporate environment, but as an entrepreneur as such, but we give them a channel. So we are working with the regulators to see how do we enable the current pieces of legislation to evolve so that we can enable this? Because as you can imagine, if we create this culture, then you actually drop the dependency on the government from a social perspective for looking after people once they retire. Because if you don't have this done quite early in the, let's call it in a life cycle, then what happens is the impact is on the government, and then the impact is actually on the taxpayers. Because then they have to contribute towards making sure that once you reach a certain retirement age, then you're going to have to help, let's call it, pay for people past retirement. So this cycle, we have to think about it really, really carefully in the way that our regulations and our legal structure is put together. From a government perspective, I do know that they're looking at it very holistically to say, how can we harmonize across security types? because equities, money markets, and bonds, it's under a different piece of legislation, and mutual funds is under, but it's actually the same thing. And it's us as human beings and the capital markets practitioners that have contributed towards this disparity. And it's worked for 36 years. The market's grown quite nicely, but if you have to think about the next 50 years and where do we want South Africa to be, or where do we want the capital markets to be, you've got to have a long-term vision in terms of how you structure the regulation, because you have one chance to get it right, and then it sits there for 20 years.
Yeah, it's a long-term perspective, isn't it?
Yeah.
Yes,
So if I can maybe just make 2 points, supplementing what my colleagues are saying here, and I fully agree with what you've been saying. I think looking at this at a lens of the private sector, where usually when you speak about regulation, it's one of those things that we are not very comfortable with, because we feel like our hands are being tied. We can't run and we can't do business the way we want to. But if you think about it at its core and at its basic, why regulation is there? Regulators are there. I mean, it's not the only reason, but regulators are there to protect the end investor. And so if you think about that nurse or that school teacher or that policeman that has got that works very hard for about 30, 35 years, and they're hoping that at the end of their retirement they can get something to live off, you have to then have guardrails in place that protect that last guy that's going to depend on these funds. And so we as the private sector, I think, whilst regulation sometimes is slightly uncomfortable, it is there and it's necessary, and it should be there. I think the second point that I wanted to make is that with that lens, then it's important that then the private sector, asset managers, custodians like ourselves, we need to partner with the regulators. We need to partner with them so that we make sure that the environment is stable for us to do business, and the environment is conducive for all the different stakeholders, for the rest of the ecosystem, for it to do what it needs to do. So there needs to be a level of partnership between the regulatory issuers and the regulatory takers. It's not official words, but I'll make them official now.
Yeah, I mean, like you say, it's interesting to see it as a positive, how it actually helps normal people rather than, just we're getting our hands tied in the industry. Yeah, perfect. So moving on a little from that then, how do you think custodians are adapting their services to accommodate asset owners and asset managers that have diverse investment strategies and global portfolios? I'll open that one up. Anyone want to?
Since you said custody.
There you go.
And I'm a custodian.
There you
go. I think it's very, very, very important to consider the very changing needs of our clients. So we consistently have to adjust ourselves and be very amenable to the changing landscape. Mark spoke earlier on around digital assets, and I know we'll touch on that, but there needs to be a level of applicability with where clients are going and with what client needs are. There's new asset classes that are coming on board, so we need to be able to cater for that. Custodians are in a very technical, but there's also systems that they need. So even our systems need to cater for the changing environment of our clients, our processes, our regulations. So what we've seen then happening is that in our organization, it's very important for us to be close to our clients and to understand what they need, but also understand that we're part of a bigger ecosystem. So we can't be looking at custodialship in its monoline. We have to consider the various other stakeholders that are around it, because it's a whole ecosystem, and then understand what's our niche, what's our value within this ecosystem, and how then do we touch on to it. As an example, what we've seen is that there's a lot of, not a lot, but what we've seen from especially our global custodians and the bigger guys that we look up to, is that they are creating solutions out of multiple products that they have. So they'll have online platforms where they'll display multiple solutions, of which one would be a custody offering. But then clients would have the the liberty and the leverage of creating their own solutions amongst these platforms. So they'll get a fund admin on there, they'll get a custodian in there, they'll get sec lending in there, and they can create for themselves a proper solution that they would need. So it would be then important to your question that custodians understand the ecosystem, they understand the client need, but how they touch and their niche within this environment. We don't want to be seen as a garage payment, because regulators say you have to have a custodian, but you want to be a custodian that adds value, and then clients will be able to pay, very happy to pay for a value add, not for a garage purchase.
Yeah, nobody usually regrets paying for a good service that helps them earn money in the long run.
So I agree with Sifiso's comments. That I expand it to the point where I think the important thing is what are you delivering to the end client, and for the international community, the South African custodians are very familiar with dealing with the international banks and inbound activity, which is largely about asset safekeeping, it's about settlement, it's about foreign exchange and other things associated with that inbound investment. And there's a lot of experience in the market in dealing with the international community. Likewise, there's a lot of experience dealing with the domestic institutional investors and asset owners. But the demands of those markets have expanded over time. So as Sifiso articulated, at one point, custody was the product. Now the demand on custody banks is to act as a trustee, provide custody. Clients want to invest in broader Africa, they want to invest globally. They have demand for accounting, valuation, performance, risk, ESG services. The markets have developed into private assets, alternatives, etc. So I think there's a requirement from an end customer's perspective to support them across that value chain. Now, in terms of where the market is on that value chain, different organizations will be at different places in terms of how they're dealing with that value chain. I think Sifiso makes a very, very important point, that value chain doesn't need to be completed by the bank all on their own. Because the complexities of service delivery, the costs associated with it essentially demands that you work with partners, or you work with other internal groups within your own organization. But I think the target is, what does a client require from a full value chain perspective, and how do we deliver against that value chain? So I think that target is pretty clear, but different organizations are at different elements of how they're delivering that, And that's a function of where the organizations come from, how they've built their business, the nature and profile of their client base, and so on. The other thing which I think is a very important point at this time, from a South Africa point of view, is that the levels of global investment are higher than they've ever been. So over time, there's been a relaxation as to how much can be invested offshore. So it was managed to quite low levels at one point to manage foreign exchange risk, etc., and repatriation. But those numbers over time have increased. And asset owners and asset managers in many cases are up against those thresholds. So managing the global component, because everything that goes global is leaving South Africa. So it's important from a securities services point of view that you can support that entire value chain, including the global component, where there's a demand for people to invest overseas for diversification reasons and all the things that you'd have in any market. But supporting those assets and being able to do that in partnership and manage that whole value chain is a critically important issue for the security services market. South Africa is very evident, but this will also be the case in other African markets as there's a further demand for international exposure.
Yeah, of course, we're focusing on South Africa here, but many countries in the continent are sharing some of the same issues, I think. Greg, I'm not sure if you've got maybe a different perspective on it.
Yeah, I think Mark touched on the most important thing that I was going to share. Look, I'm a firm believer. I've been at Straight now for 19 years, so I've seen the market end to end. innovation can happen from the back as well. So we have been working with our custodian banks to diversify our markets into a few places. In the local market, it's around any trade venue that we want to bring into the market, because our custodian is an extended, let's call it, part of our value chain in terms of the way custody is offered to an end client. We want to bring in new security types. Unit trust and mutual funds, as I mentioned, is a big focus for us. And the derivatives markets is a big focus for us from an OTC perspective, because it's the banks and lots of our custodians are the banks, and we want to create a digital platform for them. And then the big thing for me is, and Mark's alluded to it, is you have to look at value prop to a client from a one-stop shop perspective, because the foreign component is becoming more and more important, especially if you think about investors that our listed companies are trading at a ratio of P of 6. I mean, it's to buy stock in South Africa right now is really cheap. So the asset managers, from a foreign investment perspective, are moving a lot of the investment offshore. So if you think about it from an RMB perspective, the conversation would be is, how does RMB service their client through a one-stop shop, through the central depository in a way that they can access the global markets. And I can tell you, just from very high-level research that I've done on this here, you take 7 hops into the foreign market, going through market infrastructure, you have 3 into the foreign market, and then that makes a big difference for how RMB can service an end client in this context. So there's lots of good things that will come out of it. I think the number that it's 5 trillion now that's sitting offshore. And that's a significant portion that we would like to be back in the local market, so that we can get value from a settlement perspective, from an asset servicing perspective. It's big. So we need to do a lot of work to make sure that we can service them in a consistent way.
Thank you. So, another fairly broad question, I think. How would you characterize the fund administration business in South Africa? And then do you think it's a growing opportunity? So, Mark, have you got any thoughts?
Yeah, let me look. I think one of the things that's kind of not well understood internationally is that South Africa is one of the most mature markets from a mid and back office outsourcing point of view, and this is a comment through time. But there was a period when a number of the large asset managers in South Africa, they took the decision to ring fence their mid and back offices and create separate entities that would support them as a group, but also it opened them up to be able to provide third-party administration for other organizations. So the market in that sense has been providing those services and providing outsourcing solutions for fund administration for 25 years in some instances. Now, over that period, there's been various acquisition and other activities, the introduction of services from the international banks in that space. So the market's changed, but the market's mature in terms of fund administration. Now, in terms of that changing landscape, there's a lot of activity around how fund administration is being done. So the instances where fund administration is being done in-house with an asset manager is now very much in the minority from a pure scale point of view. So most of that's been outsourced to a third party who's either resident domestically or is an international bank who's providing these services through their offshore operating model. That said, from a value chain, going to the previous question, from a value chain point of view, being able to support a client from an end-to-end perspective creates an opportunity to provide fund administration as part of your overall service offering, whether you do it internally, whether you do it with an internal partner organization, or whether you do it with a third party. But having that capability is an opportunity to be considered. The other thing, and it's kind of been touched on, is obviously the greater the demand there is for new products, for alternative products, etc., And in fact, looking at management company structures and things like this, the more demand there is for that, the greater the opportunity there is for fund administration service. So it's a critical part of the value chain. And how you do it is where the strategic consideration needs to have lots of thought, because fund administration is not, this is a scale activity. The costs associated with it are not insignificant. So doing it in an efficient manner, internally or with a partner, and how you commercialize that, is a very important series of questions, but it's a critical function in the value chain. So it needs to be catered for in that value chain in an appropriate way. I think the other thing I would say is that from a domestic market point of view, the market's done an exceptional job in terms of dealing with a multiplicity of products, dealing with, to Greg's point, South Africa's got a very mature savings market. That mature savings market has led to many different types of funds, classes, sub-funds, and very complex structures, which the fund administration community in South Africa has done an exceptional job in servicing. And given the depth of the life and pensions market, this trajectory is only going to continue, So again, important to determine where does it fit in the value chain, how do we execute against it, and for those providers of fund administration in the domestic market, obviously their challenge is building scale, looking at broader diversification, and of course a number of those factors are important strategically for them to continue to grow a franchise. A lot of this is how you commercialize your operation. There's a client delivery, but then understanding the economics and how you commercialize it and how you make these activities profitable.
Great, guys. So you...
So I mean, I think for me, what I've noticed in the fund administration space is that there's been an evolution out of pure fund administration, let's call it capability, over the last few years that has now started tagging on certain capabilities that are traditionally executed by a custodian or a transfer agent in the mutual fund space, or other capabilities that they've now latched onto fund administration. And I think for me, that's an area that we need to be aware of because, Sofiso, as an example, from an RMB perspective, is licensed by Straight under a specific regulatory framework, and they need to comply with that. If I have a look at some of the fund administrators in the current market, and if I look at some of the capabilities, it's a duplication of what Sofiso does. And then you start asking the question around under what regulatory framework do they work? It's tied back to your question around phase, and let's maybe call it SISCA as well. So for me, the more access we are, from a CSD perspective, that we're getting to the market, the more we are starting to ask ourselves the questions, is there regulatory arbitrage between certain functions in the market that has evolved for a specific need, as Mark has alluded to. The fund administration business has grown per product, per client type, but through that evolution, have they taken on certain functions that doesn't quite fit within the phase regulatory framework, but fits under the CSD framework and should be regulated? Because if I had to say to Sofiso, I can see custody services being offered by a fund administrator, and he's going to say, but they're not under the same scrutiny that I go under from a straight regulatory perspective. And then automatically it starts creating blurry regulatory lines. So that would be my only comment around fund administration. And where I can see it is in the mutual fund space, right, where fund administrators have evolved to become transfer agents, client administrative functions, and they now offer a suite of functions to a management company as an outsourced arrangement. But when I look at the regulations that they need to comply with, and then I look at the services from a custody, settlement, and administration perspective that Straight needs to comply with for all the security types, there's definitely regulatory arbitrage. So we're very cognizant about it, but our ecosystem is becoming more cognizant about it right now. But what does the unintended consequence of something like this? if left too long without being addressed, is investors are going to be paying lots of costs through the tiers, ultimately to the end investor, who's a client of RMB from a banking perspective, or Standard Bank from a banking perspective. So we need to think about that ecosystem in terms of roles, capabilities, the market structure, because the more complicated the market structure gets, and if you're not in your role in the right regulation, then the cost of the industry is just going to increase on a regular basis. The default to this was our saving industry is mandated. So we've seen that through a mandated process, but think about it if it was not mandated. And if you had choice not to invest into your pension fund, but take that contribution and invest it somewhere else, I don't think it would be successful, because people actually, you need to think about that process. But that was my only observation, Mark, around fund administration, is that I think it's evolved over the years to where maybe there's certain duplication and maybe not quite aligned to the regulatory framework that it was born under.
I think Safisa's definitely agreeing with you from what I could see.
You need to define what agree means.
Okay.
So I think, 100% with Mark's sentiments. In fact, it's many of the things that I wanted to say around this topic. But I think, responding to Greg's observation, I think it's then important to define the collaboration between then the fund administrators and the various other stakeholders in this market to avoid the duplication. I think costs from an end investor perspective are a big thing. Definitely, some of those funds can be allocated towards other funds that they can invest in instead of paying third-party providers. But this is when then there's an opportunity to collaborate, and there's an opportunity to look at those overlaps and seeing how we maximize on it, so that the value chain that Mark is talking about is properly applied for the end investor. So I think it does bring a lot of opportunity for the market players to play very nicely with each other. The point I wanted to make though on this, and the guys who speak about the evolution of this, is that we have seen South Africa is very rich from a skills perspective. So we've seen lots of internationals coming to find skills within SA broadly and in general, but particularly within this area where some internationals are coming into our region, trying to find some of those skills that are becoming more scarcer and scarcer in other places. So I think the evolution of this particular offering has been great for us, because it's brought about skills development for many of the people. Greg spoke about unemployment earlier on, and so these skills do assist and at a how do I say this properly, at a reasonable rate than you would get it elsewhere outside of SA. So that's been quite welcome, which is a massively great thing for the country.
Okay.
If I can just just to supplement our collective comments, that these are kind of integrated points, but they're also could be looked at separately. I think one of the opportunities in South Africa is efficiency in the settlement of funds. And this is in common with many global markets. The process of subscription redemption into funds in global markets, and the lead time for settlement of funds is extremely long. We have this. On the one hand, we're talking about atomic settlement in digital assets. On the other hand, we're talking about fund settlement that can take days. So efficiency around fund settlement in a market as mature as South Africa, that's an area of opportunity for sure. I think the other comment, the second comment, is to Safiso's point. I think with the fund administration expertise that's been built in the country, whether it's under domestic corporate ownership or international ownership, South Africa has developed a real skills base in fund administration. And clearly, strategically, we know from different counterparties that people want to grow their presence in South Africa and use South Africa as a hub for moving international things that are done internationally into South Africa and creating a center of excellence, which is great for South Africa. It's great for that skills base. It's great for potentially attracting other activity from other locations into South Africa. So that's a real opportunity. I think the final thing I would say is that from an asset owner's point of view, when you talk about fund administration, investment accounting and so forth, portfolio accounting, people go, oh, what do all these different phrases mean, But if you translate it into providing investment accounting and valuation and performance and analytics and ESG reporting as RMB does, asset owners and indeed asset managers, they're interested in that whole value chain, So administration of funds isn't isolated just to a fund structure. It's equally relevant for a pension fund or an entity that needs a level of reporting that goes into transaction level, understanding P&Ls, understanding performance factors, ESG factors, and that's also an opportunity and very much aligned to what we see in other markets. So depending on how you unpack it, and how you answer the question, fund administration across each of those components provides a lot of opportunity. And one final comment is that, one of the challenges in South Africa for the banks has been, in most international markets, a bank can act as a trustee and they can act as a fund administrator. With the appropriate governance and control around the trustee function. In South Africa, the trustee can't act as a fund administrator, and there may be progress on that. But that's led to the fund administration space has been consumed either through internal operations or it's been consumed by international organizations. But the banks haven't built capability in that space because if they're also a large trustee, it's an impediment to them building a fund administration business, So the regulation is in South Africa in that regard has been slightly, and don't get me wrong, the regulators will have their reasons for doing that, around protection of assets and things that Safiso, and that's a matter of choice. But that model nonetheless is different to what you see in most international markets.
Okay, so it has been mentioned, digital assets, decentralized finance. What role do you think asset services are going to have to play in this? Are there going to be things to do with regulatory compliance, for example, or investor protection? Greg, I think maybe have you got something to say on this?
Yeah, I think we need to, we need to look at investors in a very different light. So if you look at the traditional investors into the current local market or into the global markets, they have a very specific and defined strategy. One could be a saving strategy. The other could be for wealth and growth. But I just came from a conference this morning, and what was really clear for me in the digital space was that there's about 1.9 trillion rand invested into Bitcoin, dollars invested into Bitcoin. And if I had to look at their target market, it's for investors that are looking for instant gratification. So if I looked at and by the way, there isn't any investor sitting more than a 12-month period sitting on a Bitcoin investment, especially the way the prices are volatile right now. So that was an interesting stat for me. But what it made me reflect on was that if I think about it in the South African context, yes, we have our investor base right now. But if I think about our policymaker as National Treasury, they issue retail bonds. Greater than 70% of their investment is held by people over the age of 70 years. Between 50 and 70 is another 20%. So they are really worried about how do they raise capital from a policy perspective in terms of outside of going the listed route, which, as you can imagine, is a cost to them from an ecosystem perspective. But if they issue it from a retail bond perspective, how do they attract new investors into those types of structures? So it's a really big consideration for us to think about from a tokenized asset perspective, from a decentralized perspective, and we need to think about it in the context of our traditional roles that we play. What is the role of the CSD? What is the role of the custodian, et cetera, through the value chain? Because if we don't change or adopt or adapt to a different type of thinking in 10 to 20 years from now, we're not going to have, we need to think about a vision greater than 20 years so that we can keep investors within our local market. And then you ask yourself, what's the alternative? They're going to go to platforms that offer these services that might not be as highly regulated as we are. And if regulation is the catalyst to enable this within the environments, then let's have that conversation. Because then we can look at the new generation of investors in the context of how we bring them into our environment from a value prop perspective. And the other big thing, sorry, just one more thing on the new types of investors that talks to your question, is they want to be able to invest I'm going to bring my phone into this now, but everybody's got one of these devices, and the new investors of the world want to be able to have a one-touch, two-touch capability to be able to get instant gratification. And that's where the world is moving towards. So I hope I've answered your question in sorts, but that's the reality that I see in South Africa, right?
Yeah, no, definitely. Yes, Sifiso, you...
I think he's right. I think regulation is going to be a catalyst. I remember 5 years ago when we were speaking about this topic, and the sentiments were that there's a solution that's looking for a problem, But if I look at, now recently we've got institutional clients now that are very interested in this topic. I read a stat that a third of the digital coins are being bought by in-stores. So there's been a lot of evolution, but I still maintain that the regulators are going to need to be quick enough to meet up, because regulation is going to be very important in this space. Once that has been established and has been set in place with the level of consistency, then we're going to see quite a lot of ramping up of these assets. I think another important thing that I need to mention, and speaking again around the type of investor that's in this, is that asset servicing players, including the regulators, are going to need to employ quite a lot of investment into education. There's lots of acronyms, there's lots of things that we don't really know. So we're going to need to skill up the end investor. I think many of the role players, including asset managers and custodians and whoever else is in this ecosystem, is going to be lots of education that's going to need to go into it. I don't think it's something that we can take for granted. But also, obviously, regulators, they need to know this environment, they need to understand it, so that when you put a regulation in place, we know what we're doing and we know what we're talking about.
That's an interesting point, right? Often regulators tend not to be able to move as quickly as technology and, you mentioned the younger generation. Yeah, Mark, what do you think?
Look, we've done, as a firm, we've done quite a lot of work in this space for clients. And frankly, this is an unstoppable train, and I get exceptionally frustrated when I talk to certain counterparties that, think that this just isn't going to happen, because it is, and it's not necessarily, people get somewhat fixated about particular coins, but there's the principle of the technology has the ability to transform how capital markets operate, and obviously the test cases at this point have been what we've seen around the rails for products like Bitcoin, Ripple, Ether, and so on. And as Greg says, the demand for those products is significant, and it's largely been driven by retail. But then obviously over time you've got more institutional demand. And obviously in recent weeks we've seen the launch of Bitcoin ETFs, which have attracted, billions of inbound investment. So I think this is an unstoppable train. I think the tokenization of assets is the area that the banks are particularly excited about, because what does this mean? You tokenizing traditional assets, to Safiso's point, some could say, well, actually, if you tokenize an existing asset, what's the real benefit of that, But obviously there's benefits from a settlement point of view. The value chain is very different. The stakeholder engagement is different. But I think tokenization is the need for regulatory frameworks, the need for an alignment between securities and digital assets and tokenized assets is critical, whether it's integrated regulation, separate regulation, but many markets are focused on that, including South Africa. But the principles around this, it's not going away. And from an Africa point of view and a South Africa perspective, the exciting opportunity here, in my view, is the tokenization of real assets. If there's one thing that South Africa abounds in, it's lots of real assets, agricultural assets, mineral assets, etc. And obviously these are seen in listings in the form of major corporations and so forth. But agricultural programs, resource programs, all kinds of things that can potentially be tokenized to bring new product to market, to take African product to international markets. Of course you can do that in a traditional way, but it's in some of these instances, the initial tokenization globally, a lot of it has been in things like forestry, and it's in offshore locations and so forth. And of course now we're seeing issuance in Switzerland, we're seeing selected issuance in Germany and so forth. So we're starting to see it in major types of instruments. But it's an unstoppable train. Now, from a banking point of view, it causes a challenge because there's an investment required in infrastructure for digital assets, but the return on that investment is not easy to grasp. So there's an investment that needs to be made, so you have to do it, but how you do it, the timing of how you do it, and when you're likely to see revenue is the challenge that the market is facing, But once those rails are in place, those rails have got the potential to transform, and absolutely 100% Greg's point, the people in that chain, everybody needs to determine what's our role in that chain, and if we're a counterparty of the existing chain, what do we need to do to make sure we're in the digital asset chain? Because things like your record of ownership, things like transfer agent, for want of a better term, all these things have got different dynamics. So there's a role for organizations, but understanding what that role is and then preparing for change to meet that role over a reasonable time frame, I think is critical.
I think if I think about the South African context, there's lots of work that we're still doing with our custodian partners around digitizing the corporate actions environment. We spoke a lot today philosophically around economy and politics a little bit as well. But I think going back to some of the basics, we are working with our custodians to make sure that there's a digital experience for any investor from a corporate actions perspective, digital voting within the South African market context. And then there's always this one question that comes up in every conference that I attend: what is South Africa doing around T+1? And all that I'm going to say there is that we're watching the world eagerly. And we're trying to understand, outside of India, who's now moved to T+1 and who wants to go to atomic settlement, but we're watching the US markets. We would like to see how the UK markets follow, because the one question that I have not seen answered right now is the question around Forex and funding obligations. And I think all of those markets are going to go through an evolutionary process. And if the UK market goes to T+1, South Africa will definitely be asked, when are we moving? But we'll have to learn, and we'll be a fast follower. But that's just our stance on T+1 for now.
Wait and see what everyone else does. All right, perfect. Well, we've spoke about a lot of interesting issues today. I think there's always more to cover. Thank you to RMB and Straight for sponsoring us again. Thank you to all the panel for joining us. And thank you all for watching.